Hi, everyone. Mark Sorensen, Chief Investment Officer at Royal Fund Management. Since it's the end of the quarter, we're now into October, and that coincides with a little market volatility again. I thought I'd put out some market commentary video. The market has done extremely well. Keep in mind that it's not unusual to get a pullback, a little what they call backing and filling, some corrective action, some profit taking from time to time. It's interesting that it's October, and the last time that the S&P 500 was down 5% was last October. So we grew a little bit complacent there for a while. But the fact is, there's only two things that really matter to the market over time, and that is earnings and interest rates. Earnings, of course, are growing dramatically. Corporate earnings estimates continue to rise. And interest rates, the cost of capital to run, start, or grow a business, yes, they've moved up a little bit due to inflation concerns, but they're still historically low. So a lot of other things to be concerned about. Obviously, we had the coronavirus and then the Delta variants, which fortunately has started to ebb now, and other concerns. For example, the Fed and whether they're going to reduce the amount of liquidity to the market and do what they call tapering, which means to reduce the amount of bonds they're buying to add liquidity to the market. We don't expect interest rates to actually go up from a Fed standpoint for quite some time. But even if they start to reduce their bond buying in December, as predicted, estimates are that they would still buy over $600 billion of bonds in the first 6 months of next year. So there's still a lot of liquidity for the marketplace. Interest rates remain low. Corporate earnings are good. And those are the only things that matter to the market in the long term. Though the commentators on TV will give you a lot of other things to worry about, of course. The market, September is the worst month of the year historically. The S&P was down 4.8%. The NASDAQ was down 5.3%. And then as we enter October, when maybe we correct a little bit more, but we are starting to see some signs that we're a bit oversold here. Would not be surprised to see a bounce pretty soon. Also, keep in mind that November and December are two of the best months of the year, and we're approaching the end of the year as well. The fourth quarter, by the way, is historically up 80% of the time since World War II and has averaged a gain of 3.9%. So we are still optimistic for the market. We think the fundamentals are still sound, low interest rates, solid earnings, a lot of liquidity for the market. So a little pause here doesn't concern us too much. It just simply builds a better foundation to sustain better the next move up in the marketplace. In fact, even though it looks pretty shaky right now, let me show you a chart real quick. This is a chart of the NASDAQ 100, which represents, among other things, the big cap technology stocks that people are concerned about right now from a valuation standpoint. This is a one-year chart, and what I've done here is drawn a trend line, the red lines here, and you'll see that the market has been at the bottom of this trend line three other times in the last year. Back last October, as we mentioned, in March again, in May again. So we haven't really broken down completely. We're just in the bottom end of a pretty wide trading range. Yes, we could go a little lower, but we think because the fundamentals are sound and there's still a lot of liquidity for the marketplace, that this is just a normal profit taking, backing and filling, little pause in the market. We don't think the market can go down a lot because of the strong fundamentals, underlying fundamentals. And we also don't think any downdraft will be long term. We think it'll be relatively short lived. Not predicting this, but it's interesting. The last time the S&P 500 was down over 5%, which was October a year ago, 6 days later, it was back to a new high. So we do think the dips will be bought, and it's just a matter of time, more seasonal than anything else. So with that, let me go back to full screen and just say, enjoy the fall. I'm working remotely, and you can see some fall leaves behind me. It's a wonderful time of year. And as we feel like there's a need to put out more information on the market, we will do so. Thanks, everyone. Have a great day.